listening to the Economics and Country Risk podcast from S&P Global Market Intelligence. In each episode, our experts will provide you with the where, how, and when to make decisions that transform your business.
In this episode, Janine Cataldi, Associate Director at S&P Global Market Intelligence, shares our global construction outlook.
Good morning, good afternoon, and good evening. We'll jump right in to the global construction forecast. I'm going to go over the most recently released forecast, which just came out at the beginning of April. And this is based on our March global macroeconomics forecast. So I just want to touch on that because that's really what's driving our forecast. It's really a similar story to what we have been talking about for quite a while now, at least the last couple cycles. We've got tightening monetary policies in Europe and North America that are going to likely stall growth in some fashion. We're definitely seeing the impacts in both these regions in the residential markets, and I'll touch on that in just a moment. Latin America region, this one is going to slow. Part of it is base effects. You can see that 2021, 2022 are stronger growth, and then that's going to slow. But there are other conditions. Again, high interest rates are affecting all regions. Latin America is also being impacted by that. They've got high inflation, and weaker demand from North America and Europe is going to impact their export demand, which is also going to weaken their economy. For emerging Europe, you're going to see continued impacts from this ongoing Russia-Ukraine war, and that are still going to impact quite a bit in that region. A lot of lack of confidence and capital flight out of Russia is going to have an impact. The two regions that we expect to be the strongest in terms of economic growth as well as construction growth are going to be the Middle East, Africa, and Asia Pacific. Middle East, Africa is benefiting from continued energy prices. They've come down a little bit, but there have been recent cutbacks, which may boost that a little bit. But there is a lot of investment coming from that in the Middle East, Africa region. And then Asia Pacific region is going to benefit quite a bit from the reopening of mainland China. So to dive in and see how that impacts construction, it's really a very similar picture. You can see declines in construction spending in 2023, Western Europe, North America, and Eastern Europe. These are the three regions that have ongoing issues. Eastern Europe, Russia accounts for about half of that, so that's pulling that down. North America and Western Europe, what's pulling them down is residential spending. So while total construction spending is kind of stable between 2022 and 2023, you can see, though, that residential has shown a marked decline in 2023, and that's going to be the area of weakness for this year. We do expect it to bounce back as interest rates start to lower, as inflation comes down, and as demand begins to pick back up. The strongest segment we're going to see is infrastructure. There's quite a few markets that have plans in place and a big push for infrastructure spending, public works spending, as a means to keep the economy moving and to keep the segment moving forward. It's a way to keep investing in your economy. So infrastructure is going to be the leader for the next couple of years for sure. Non-residential structures is a mixed bag. We're seeing some weakness in manufacturing outside of the US, but in the US, within manufacturing, it is a mixed bag as well. We're seeing a lot of activity in the United States related to EV battery plants, semiconductor manufacturing plants. So there are a couple segments of manufacturing that are doing well. We're starting to see a marginal pickup in some of the commercial segments, office, lodging a little bit, but we're going to start to see some weakness in warehouse. And again, I'll touch on all of these pieces when we get to the specific regions. But the takeaway from this is that residential is going to be weak, but infrastructure is going to be strong. I just want to highlight very quickly changes from our previous forecast, which I always like to do so clients have an idea of what changed and why. Top line for 2023, our global outlook did not change, and there's marginal downturn or marginal weakness in 2024. But underneath that, there are some changes. For 2023, we have stronger spending in Asia Pacific, And you can see that we have less weakness in Eastern Europe, a slight weakening in Middle East Africa, but still very strong spending. Where the changes are coming from underneath all of this is a weaker outlook for North America and Western Europe. And again, that is really due to the residential market and what we expect to happen going forward here for the next year in terms of the high interest rates really having an impact on that market. For 2024, not too many changes. One of the larger areas of downturn was North America. And again, that's just coming off a weaker forward looking. Again, interest rates being higher longer than we anticipated originally. By segment, I'm just going to touch on residential really quickly here. Western Europe, North America, these two markets together, their residential markets, account for just shy of 50% of world residential spending. So these two markets being down is going to have an impact. And actually within each region, residential spending is about 50% of Western Europe's market, and the same in North America, it's right around 50%. So this is a large segment, and downturns in that segment are going to be felt throughout the region. Everywhere else is doing fairly well. Eastern Europe, that is going to be hindered by Russia and Ukraine and what's going on in those areas. Taking a quick look at the segments. So we've got non-res structures, manufacturing growth slowing. And I want to caution that some of these growth rates where you start to see declines, and especially like energy over here on the infrastructure side, while the growth rates might be showing small declines, it really is just spending levels coming down. They're still high. They're just coming down after a big bump. So it's not necessarily that it's going to be tanking or anything. It's just that it's coming down from heightened spending and it's returning to a more normal trend. But on the non-residential structure side, you can see that industrial's slowing a little bit, but institutional and office will be picking up. And those are two areas that did suffer through the pandemic. And the office area specifically is now finally starting to pick back up as, you know, we've now moved to a point of understanding what we want for our office footprints going forward. So we're going to see that pick up. I'm just going to highlight a couple things in each region. So for Latin American, we're coming down. 2022 was a very strong year. That was bouncing back from weakness during the pandemic. So the lower growth in 2023 has a lot to do with base effect. You're just coming down. But in that region, you've got some political uncertainty. You've got heightened inflation, restrictive monetary policies. You're going to have low external demand coming from North America and Europe. Again, there's some areas of political uncertainty in Chile. There's plans to rewrite the constitution. You're looking in Peru with potential impeachment and different political difficulties. And because of those difficulties, you might see restrained investment. North America, I've read on this one already, but residential is going to be the big drag. Infrastructure in North America is going to benefit. You've got the Infrastructure Act in the United States that we do expect 2023 to really start seeing these dollars flowing through to projects and seeing an uptick. And we do expect that segment to lead the growth for the next couple of years. We also expect peak spend from that IIJA probably in 2025, 2026 timeframe as these projects get off the ground. In this region, you see that US will be the weakest. That has a lot to do just with the residential market really pulling things down. Canada has weaker residential spending as well. They're coming off of extreme highs in residential activity that are just resettling back down to a more normal level. Mexico is actually benefiting right now. There was recently an announcement that Tesla plans to build a vehicle assembly plant there. So there is some interest and some activity happening in Mexico as well that will help that economy keep growing. Switching gears to Western Europe, this is a similar situation to North America where you've got constraints due to borrowing costs, lending standards being tighter, really affecting affordability. Here it's a similar situation to North America. Residential's down, infrastructure is going to be stronger. In the EU, you've got funds from Recovery and Resilience, you've got your general EU funds. These go to support many projects, and usually these are projects that are related to transportation and energy. So you'll see that lift in the infrastructure segment. Overall, we do expect the region to pick back up in 2024 as things kind of settle down and inflation moves back towards more normal lower levels. Eastern Europe, we've touched on the fact that Russia is one of the driving forces of the declines in this region. There's capital flight related to the war, so it is making activity and investment harder to come by. We do also expect some declines in construction spending in Hungary, Poland, and Czechia. And this is largely due to delays in EU funds, political reasons, just making sure the money is going where it needs to go, and also weaker housing activity. Weaker housing activity is definitely a big factor in Europe and North America. In Ukraine, once the war ends, we expect there to be quite a lot of money, a substantial amount of money put towards reconstruction efforts. So that should lift the region and the Ukraine economy once that starts. Shifting gears to the Middle East and Africa outlook, this is a fairly stable outlook. We don't expect there to be too many fluctuations. Once again, infrastructure will be the driving force. And this has a lot to do with, again, funds being put towards specific projects from the governments. It's expected to outperform compared to the world averages. And again, another region where there are some tightening financial conditions that will have an impact on res and non-res structures, but the impacts are not quite as large as we see in Europe and North America. And then Asia Pacific construction here, what we're seeing here is that an increase in total construction spending, despite headwinds, really the outlook is brightened. It's really due to the reopening of mainland China's economy. And this region has had more moderate inflation than others. So there is this expectation that this region is definitely going to outperform in terms of overall growth, with Pakistan being the only one that has a decline in spending. And currently for 2023, there's expectation that Pakistan's GDP is going to decline, not a huge amount, but by about 0.3%. But the Pakistan market is facing many constraints. You've got double-digit inflation, tight credit markets, supply constraints, and there was massive flooding that caused quite a bit of damage to the agriculture and industrial areas. And right now, the estimates by the government are that it's close to $30 billion in damage. Moving forward, some of that should be offset, but this slowing investment, a lot of this tightness and money going elsewhere from the government has forced the government to make cuts to non-essential infrastructure and development spending. So that is going to make a big impact here in Pakistan. So I wanted to highlight those pieces there. Overall, by segment, we can see that really Asia Pacific spending remains healthy. It's going to stay healthy 23 and 24. And once again, infrastructure overall is going to lead the way in this region as well. And from that, I'd like to say thank you, and I hope everyone has a great rest of their day.
Thank you for listening to the Economics and Country Risk podcast. Connect with us on LinkedIn and Twitter, and don't forget to subscribe to the podcast so you never miss an episode.